Even so-called richest, smartest guys in the room got caught flat-footed during last week's volatile market moves. Number one example, just 3 weeks ago in Davos, this guy, Ray Dalio, he is the founder of Bridgewater, the nation's largest hedge fund, said clear sailing ahead for U.S. markets. And if you're holding cash, you're feeling pretty stupid. Fast forward to today, seems to be change of tune. In a LinkedIn blog post, Dalio is now saying the risks of recession are rising, while Bridgewater's co-CIO Bob Prince says there's probably a much bigger shakeout to come, bigger than last week. So what was last week really all about? And if we see the same issues start to line up again, will we see it? It's been a tumultuous market ride. You can see the point moves yesterday. What you don't see here are the minuses and the pluses. Friday was a plus. Monday was a minus. To the floor show on our traders at the New York Stock Exchange and the CME Group, along with Mark Hamrick of Bankrate.com. He's the senior economist. Guys, we know it probably wasn't just one thing. That would be too simple. So I'll give you two. But I'll start with you, John Corpina. What have you identified as the culprits for last week's moves?
All right, so two things I've looked at. One is you cannot have one-way markets, right? Our market went up straight, 25% over 14 months. At some point, it was going to break. We all enjoyed it on the way up. We have to be strong enough to take a little bit of pain on the way down. The other thing that I looked at is what you just said. There was not one real catalyst that caused this market turn. I think that is somewhat concerning, right? We've had so many different topics come up, whether it's interest rates, North Korea, closing of the government. We've got all these different things, but there wasn't that one thing that turned the market. So when the market turns, everyone starts to think, well, what is it? What is out there? What don't we know? The fear of not knowing something added to this market. We saw a lot of momentum. We saw players on the sidelines jump in. We saw program trading pick up activity there. The good saving grace is the people waited for that 5% pullback to jump into the market. We saw it last week. We're clearly seeing it today, too.
Okay, but you said people panicking. Chris, people or algos, these algorithm trades, these computer program trades?
Yeah, I mean, well, the algorithms they're programmed by people. So when you get a lack of liquidity, which is what we had during that last week, when you have the market moving 4, 5, 6% at a crack, the liquidity dries up. Everybody puts their hands back and wants to wait. Everybody that said they were going to buy the 10% dip, they're like, well, maybe it's going to be 15 or 20. And with electronic trading, that gets exacerbated. That's really the bottom line. So that's the part and parcel. It's nice to have electronic trading because you can get stuff done, but when liquidity goes away, you get these big moves. So from top to bottom, the S&P broke 12%. Maybe that's our trading range for the next 3 or 4 months, and I would not be surprised to see 100, 200, 300-point moves every day in the Dow, so we figure out where we're going. It's nice. The S&P's got a double bottom, and a lot of people are looking at that. They're trying to call the bottom. We'll see. If we go back and test that bottom, you could run into the same issue again, where everybody says, wait a minute, I'm out. So
you're right about the humans, because Alan Valdez, who's one of the traders on the floor there, had told me last week that the kids are loading up the machines. So somebody has to load them and input that. Mark, you've got Ray Dalio of Bridgewater saying, watch out for the R word, recession. Do you see anything on the horizon that gives you an indication we return to a recession?
Well, first of all, based on his changes in sentiment, I think I need to put a neck brace on. But the quick answer to your question is no. But, just about everything we are looking at in the economy right now seems to be positive. And we hearken back to that employment report, which now seems like it was a year ago. But, of course, that's the one that sort of set off this selling. And it was sort of an OMG, wages are rising, which is exactly what we've been waiting for oh so long, as you know. So I think, if anything, we didn't have a 3% pullback. We didn't have a 5% pullback, and there was a price to be paid, and we have paid that price. Remains to be seen whether we have to go lower from here.
All right, gentlemen, thank you very much.